commodities. But first up, let's take a look at what the global markets are doing when it comes to gold and silver. And we've seen quite a bit of decline in the global market, especially when it comes to gold. That one, of course, oil is sitting with an uptick of 0.5% as we speak. It is trading near that $60.2 per barrel mark. It has snapped 2-day losing streak and now sitting with an increase of 0.5% as we speak. Remember, traders are now digesting more measures from the US, which is trying to exert pressure on Venezuelan oil refineries, and that is one factor which continues to have an impact and have a bearing on the global oil market. But let's also talk about the precious metals then, and that is seeing an uptick on account of annual rebalancing of global indices. Spot gold is trading at $4,425 per ounce mark. It is down 0.7% today, and remember, it is falling for the second consecutive day. Silver, meanwhile, trading at $76.3 per barrel, down 2.5% today after the solid rally that we have seen in calendar year 2025. And now we are seeing a breather as far as the precious metals rally is concerned. It ended 4% lower in trade yesterday. As I mentioned, annual rebalancing of commodity indices is leading to the fall, and brokerage houses have come out with their estimates. In fact, Citi expects a global outflow to the tune of $6.8 billion from silver on account of this rebalancing, and that is precisely the reason why gold and silver are falling in trade today. But to discuss this in greater detail, gold, as I mentioned, is steady in trade ahead of annual rebalancing of commodity indices and the release of key US economic data this week. Passive tracking funds are due to begin selling precious metals futures from today to match the new weightings required by the indices. Sales are expected to be greater than usual, led by the rally in gold and silver prices that we have seen over the last calendar year. In fact, Citigroup estimates that roughly $6.8 billion of silver futures could be sold as a result of this rebalancing, which is equal to 12% of the open interest on COMEX. To discuss this in greater detail, we are now joined by Mr. Mohammed Imran, research analyst at Mirae Asset Sharekhan. Thank you so much, Mr. Imran, for taking your time out and joining us here on ET Now. Your thoughts, your take on the kind of fall that we are seeing in the global precious market. Let's start off with that. What kind of back of the envelope working have you done, and what kind of outflow are you expecting on futures because of the annual rebalancing that is expected to take place in the global market?
Hello, Ashesha. So, as we have seen that precious metals has already started falling, and we expect that further sell-off. The reason being that the rebalancing is to the average mean reversion. So, if we have to look at from 2025 perspective, at the start of it, the balance was that silver had a weightage of 4.49% and gold had a weightage of 14.29%. And by the end of 2025, this combined weightage is around 30%. So this combined weightage has to come down to 18.84%. So that's why we are likely to see 12% sell-off in the precious metals, and especially we are expecting a further sell-off in silver prices. Silver at COMEX level, it could test the support of $70. So yes, as you have already mentioned, so there could be global sell-off around more than 6 billion US dollar. And if you have to look at from gold's perspective, like the weightage has been improved or increased from 14.29 of 2025 to 14.9. So already prices have rallied in last 2 years. So that's why this current weightage is around 30%. But as we move into 2026, the rebalancing could see a sell-off in precious metals.
Okay, so that's as far as precious metals is concerned, Mr. Imran. But also, what about oil then? Because Brent Crude saw a decline of nearly 18 to 20% last year. Because of this rebalancing, could we see inflows in the oil market which could take Brent higher from the current levels of $60 per barrel?
See, what has happened in energy basket is that the rebalancing has reduced the weightage on WTI, that is US crude and US natural gas. Meanwhile, the rebalancing has increased the weightage on Brent crude, which is a global benchmark or Middle Eastern crude. So that's why you are going to see a sell off in WTI crude. Meanwhile, we could see a increased inflow in Brent crude, because now Brent crude weightage is around 8.36, while in 2025 the weightage was around 8.03%. So there is an improvement of increase in weightage by 0.33%. So that's why you are going to see inflows in Brent, and Brent, because of these inflows, we could see Brent prices moving higher towards $62.
Okay, so Brent prices from $60 per barrel currently could inch higher because of inflows on account of the fall in Brent crude prices that we've seen last year. And will this be the case for copper as well? Copper prices have risen by about what, 40 to 45% since the beginning of last year. Has the weightage of copper also increased in the global market, because of which we could see an outflow? Am I getting it right?
Yes, so already, like, we have seen that 42% rally in 2025, but and its weightage is around current weightage, like if you don't count today's fall, but current weightage is around 6%. And going forward, like 2026, the Bloomberg Commodity Index has given a weightage of 6.36%. So still, there could be some correction, but overall, we feel copper prices are going to remain like it should come back towards 13,000 level in coming weeks.
Okay, and do you believe that the supply crunch that we are seeing in the global copper market is likely to persist going forward as well? Not talking about rebalancing, but in general, because of the surge in demand for copper that we are seeing in the global market, do you think supply crunch is likely to persist going forward as well?
So one of the reasons, like the biggest reasons, was the supply constraint, and as the latest mining numbers or the latest guidance which are coming out from the different geographies, uh, earlier, like end of September or October, it was expected that the global deficit of copper, refined copper, would be around between 2 lakh thousand tons to 200,000 tons to 300,000 tons. But now market is anticipating that there could be a larger deficit of between 500 KT to 600 KT. So that's why we have seen that copper prices have moved more than 20% in last 3 months. So like, as I said, that this deficit is going to go higher because of the Grasberg mine that happened in September, where 8 lakh tons of mud sludge has covered the whole mine. So this is going to take further time. Like, we could see that the full operation of this mines would nearly start by end of 2027, and this mine account for 3% of global production. So that's why we are seeing that this numbers are going to go higher. The deficit numbers are going to go higher.
Okay, so the deficit number for copper is expected to inch higher, and supply crunch perhaps is likely to persist going forward as well. But Mr. Imran, let's also talk about other industrial metals like something like zinc, copper, aluminium. What is your outlook when it comes to these industrial metals?
See, zinc, like aluminium. See, one thing that would happen in aluminium is that although China's production is already peaking out, like they have reached their capacity of 45 million tons annually, but what has Chinese refiners or Chinese smelters has done is that over the last 5 years they have done huge capex in Indonesia, and so they will get a benefit of these capex, and it is expected that Indonesia will come up with like the production will jump from Indonesia by 5 to 6 lakh tons this year. So that is one thing, and the other thing is that rally in copper will have a substitution effect on aluminium demand, and so that's why we anticipate that global aluminium could see a deficit of between 200 to 300 KT for 2026, and that's why we expect that aluminium is going to do better in 2026. And
Okay.
meanwhile, for zinc, as we have seen that zinc already has rallied around 3,300 tons at LME, but going forward, uh, European market has if you see between October November, European markets were facing short-term crunches, and that's why the zinc market at LME had gone into backwardation of $300 per ton. But now it is in contango of around $40 per ton. The reason being that Chinese exports to European market has jumped in last 2 months, and going ahead, we expect that there would be more supplies of zinc metal coming into European market. So zinc is expected to fall towards 2,900 or even more in coming months.
Okay, so that's the view coming in on industrial metals. Imran, thank you so much for taking your time out and joining us here on ET Now. So annual rebalancing of indices is having an impact on commodities in the global market. But shifting focus to some other segments, and let's also talk about some interesting facts and figures from the world of commodities. And today we put the spotlight on the items that are included in an iPhone. Let's also talk about the metals inside your iPhone, which are more precious than you thought. iPhone contains an estimated 30 chemical elements, including well-known metals like aluminium, copper, lithium, silver, and yes, even gold. There's also an array of obscure metals such as rare earth elements, known for their wide-ranging tech and renewable energy applications, tucked inside your iPhone. So yes, if you're an iPhone user, you're clutching important pieces of the Earth's crust, which have been dug up from mines around the world. That's all the time we have on this edition of Commodity Central, but don't go anywhere. Newsroom coming up next.